Hi, everyone. This is Michelle with the Wise Home Group. I'm here with some of the rest of our team. Cheryl, would you like to introduce yourself?
Hi there, my name is Cheryl Crown. I'm a realtor with the Wise Home Group.
So we are here today for our first-time homebuyer seminar. So basically, we're just going to go through some things real quick. In case you've had questions about what it takes to be a first-time homebuyer, especially in this crazy market we're in. So we're going to go through it. And if you have any questions, feel free to put them in the chat and we will make sure we get back to you on those. And I'm going to share my screen here with you. Give me 2 seconds. All right, can you all see that?
Yep.
Okay. So again, basically we're the Wise Home Group. We are one of the top producing real estate teams in Douglas County and on the Front Range. We consist of myself and Cheryl as realtors, and then we also have a strong group of professionals behind us that help us with every transaction, and Lisa's on as well. She's our admin and helps with that. So, but we also have a much larger team as well, and we will tap into those when we need to throughout the program, or throughout the transaction, I should say. So let's get started. Maybe, hold on. All right, there we go. So basically, when we talk about buying a home or buying a piece of property, there's a lot of emotion that goes into it. And so, you know, when we are going through the process and we talk to our clients about what it feels like when they're going through it, our goal is to make it as positive of an experience as possible. It can be a little bit overwhelming, but that's why we are here to help work through that. And so some of the words that people come up with when we ask them what this word might be, you can see on your screen there. It's a place of comfort knowing that they're now homeowners. They're elated. It's giving them financial stability. It's helping them create a family legacy. A lot of safety and security goes into a lot of that, what we hear back, knowing that they now have something that they can call their own. So as you're going through, just think about what this might mean to you as you go through the process. Today, we're going to talk about some of the common fears and facts that are helpful when you're buying a home. And we're also going to discuss this. There's 8 simple steps to help you get to that home ownership piece. Cheryl, you want to go through the fears and facts?
Sure, absolutely. So a common fear that we experience with first-time homeowners is they're concerned that they can't afford to buy a home right now. And actually, what is in fact the truth is that you can't afford not to buy a home right now. If you take into consideration the money that you put toward renting and the, you know, when you invest in yourself and you invest in your own home, it helps you build wealth through real estate. Next.
Yep.
Okay, fear. I should wait until the real estate market gets better. Well, as we all know, the market hasn't really seemed to get better. Gosh, Michelle, like 9 years. It's been on an upward climb. And there honestly really is never a wrong time to buy the right home. Another common fear, I don't have the money for the down payment. Well, we work with a plethora of lenders who can give you so many options that require minimal down payments, sometimes 0 down payments, depending on the program. So we can connect you with a multitude of different lenders to try to get that situated for you. Okay, fear, I can't afford to buy my dream home. Well, the best way to get closer to buying your dream home is to buy your first home. So we do have several clients who started off with a condominium or a townhome, and then over the course of time, as those properties appreciated, they were able to either keep that and have it be a rental and have rental income as a result, or sell it and use the appreciation to put it down on the next step in their home buying journey.
Okay, so there's basically 8 steps that go towards buying a home. Now, in actuality, there's over like 180 steps in buying a home, but we really only have you try to work with the first 8. And then we handle the other 172 steps. So that's the important part to think about when you hire an agent, that, you know, we work for you with your best interest at heart, and we really help you through the process. So the first step is deciding to buy. So when you're contemplating all of this, you want to make sure that it's something that, you know, you're comfortable with and you understand the numbers behind it. So the U.S. Federal Reserve Board of Consumer Finance in 2017 said that the average net worth of a renter is only $4,000, but the average net worth of a homeowner is $184,400. So that was several years ago even, but this was the most recent number we could find. But so imagine where that number might be today. So just simply by owning a piece of property that you live in, your net worth jumps exponentially. You know, the home is the largest financial asset that most people have, and this is due to the equity and the appreciation that you get over time. So the average annual appreciation rate nationally is about 4 to 6% since 1977. But here in Colorado, our appreciation rates are actually a little bit higher than that. So if you look at something even on a super conservative level of 3% annual appreciation, so a home you purchased for $300,000 today would grow and be worth $728,000 in 30 years from now. Even at a 1.5% annual appreciation, the same house is going to be worth almost $469,000. So by doing nothing but living in your home and paying your mortgage, you are going to practically double your money, at least. And those are really low numbers. Our numbers have been much higher than that recently. So buying your home is emotional. We talked about that a little bit before. It's definitely home is where the heart is. That's a super popular saying. And so you have to look at it from that it represents your personal taste and provides you with a haven of stability and security for you and your loved ones. It also provides you with the pride of ownership because it's yours. You're not renting it from somebody. You're not paying somebody else's mortgage. And so therefore you can do what you want to make it your own. Not only is it an emotional decision, it's also a rational decision because home is where your wealth is. Now, that's not something we hear as often as home is where the heart is, but in some ways we feel that this is even more important because you grow your wealth by building up that equity, your debt gets paid down and the appreciation of your home goes up. So you've got a sliding scale going. And in the United States, you also get a tax deductible benefits on your mortgage interest through property and mortgage interest write-offs. Now, you'll want to talk to a tax attorney about that because we are not a tax attorney. There's our disclaimer. But it is something that is very much appreciated in home ownership. And on top of that, you know, your home, because we talked about the sliding scale of appreciation and paying down your mortgage, it's kind of like an actual accidental investment that you create. And it allows you to have some leverage opportunities as you go down the road. Kind of how Cheryl mentioned earlier that you can rent your first home on your way to your dream home. That is one way to use that equity to trade up to a better home, or keeping it and investing in possibly a second home, a rental home, a beach home, ski home, something like that. So when you're deciding to buy, think about this. If you rent and you're paying $1,500 a month, which we all know is practically impossible to find in Denver right now, but if you take that $1,500 a month and pay it for over 30 years, which is what your typical mortgage is, you're going to spend approximately $540,000. That's $500,000 and you're going to own nothing. So think about that as if you paid yourself. So if you took out a 30-year fixed mortgage at $300,000 and made your monthly mortgage payments of roughly that same $1,500, it would be roughly $1,563, you'd end up paying $468,000 in mortgage and interest payments over the life of the loan. So that's very comparable to the same you pay in rent. However, after 30 years, you own that home. And so if you wanted to turn around and sell it, we would anticipate at this point with a 3% annual appreciation that value of that asset is now going to be almost $750,000. So basically that's a profit to you of $250,000. So that's, and again, these inflation rates change all over the country and year to year, but this is just kind of a general ballpark to follow. Okay, so now it's time to hire your agent. Cheryl, you want to touch on some of these?
Sure, of course. So we as agents are your advocate. We are here to help guide you through the process, to make sure that everything is done in your best interest and you're protected during the transaction. So when we represent you as your buyer's agent, we work for free. We are basically, the seller pays the commission to the buyer's agent. So there's no cost out of pocket for you. And we will work together to set mutual expectations in writing before me and you, as once you decide to hire us. And then we are committed to getting you into the home you want while you commit to working exclusively with us. So there are several financing options available, which I did mention a little bit earlier. There are first-time home buyer programs, little to no money down programs, CHAPA housing program options, which are basically government, either government loans or government grants, FHA loans, conventional loans, and jumbo loans. Every situation is unique, and there are loans available for each unique situation. All right, so in order to secure your financing, you're going to start with choosing a loan officer or a mortgage specialist, and then you'll go ahead and fill out an application and get pre-approved. And that application will include, you'll need documents like your pay stubs, your tax returns, any sources of income that you have, credit card debt, and that type of thing. So then once all that information is submitted to the loan officer, they will offer you pre-approval, and then you will make a determination which loan option you want to choose. And then when Michelle and I work with you to help you find your home, then we would give the purchase offer to the listing agent. And then once we go under contract, the lender would receive that information, and we would get appraisal information from the lender, title commitment, and then they would help us with the funding at the closing table. So there are three basic factors to mortgage options. Number one is the down payment, which essentially, if you're going to buy a $300,000 house and you want to put 10% down, that would be $30,000. If you want to put 1% down, that would only be $3,000, and the loan would determine that requirement. The other important aspect is the interest rate, which right now are insanely low. It's a really incredible time to buy a home because they're all typically under 3%. And then the terms. I'd say in most situations, 30-year mortgage is what our clients end up going with, but they do have 15-year options as well. All right. Your monthly payment consists of principal, interest, taxes, and insurance. The principal is basically the money that is used to pay down the $300,000 mortgage. The interest is the amortized amount of whatever your interest rate is that gets added on to your monthly amount. Taxes are dependent on the property. So the county basically establishes a tax for your property, and then you can either choose to pay that through your mortgage or pay it in a lump sum to the county directly. And then insurance would cover you for disasters that you may have in the home, like fire or flood or a sink overflows and that type of thing. And we can also help you with nailing down an insurance agent. All right, so pre-qualification versus pre-approval. So pre-qualification is simply a rough estimate of how much you can borrow. So it's kind of giving you an estimate, so you can know like what ballpark to be in when you're looking to purchase a home. And then pre-approval involves a formal application, and then you actually receive a formal commitment from the lender stating exactly how much you can borrow and at what rate. That information is typically required, especially in this market, when you're making an offer on a property, because the listing agent wants to make sure that you are able to purchase a home at that price point.
And if I could just add something too, I would say that in this market where it's very much a seller's market, and we're definitely trying to win these properties as a buyer's perspective, it's important that we have you go all the way through the pre-approval process, because that's going to be a much stronger submittal with our offer to the listing agent and the seller than just a pre-qualification. Because again, they hone in much tighter on your finances and your ability to buy. And so basically, that's what we're asking a lot of our clients to do, just because it is so much more beneficial to you as the buyer at this point.
You want to go with the rest, Michelle?
Sure. So basically, when you're looking at your financing options, and there's multiple mortgage options out there, but what you're going to want to kind of consider is what's most important to you. Is it a low monthly payment? So if that's the case, if you want the lowest monthly payment possible, you're going to have to put a little bit more money down to be able to purchase that home, because the more money you put down, that drives down the mortgage, the overall loan amount, which would then be a lesser payment per month. Now, if you don't have a lot of money saved, and so therefore you need a low down payment, which is typically what most first-time home buyers do, we use one of our first-time home buyer programs through the lenders, and that helps us be able to get into a property with a little bit less money down. It's a big myth out there that a lot of people think they need all this money to go buy a house for a down payment, but really that's not true. And again, if you connect with us, we can connect you with our lenders who can help walk you through that. If your goal is to build equity quickly, then there's the possibility where you can make principal only voluntary prepayments. So there's a rough estimate out there that if you make one extra payment a year in your 30-year loan, you'll reduce the loan to somewhere between 17 and 20 years. So instead of paying on that home for 30 years, it reduces it. And then if you're trying to minimize your risk, and get the lowest amount of interest rate, or the lowest interest rate, and things like that, then you're going to want to take a 30-year fixed rate program with 20% down. But again, that's not always necessary or possible for first-time home buyers. So when you're determining your monthly payment, your lender's going to decide what you can borrow. So they're going to give you a pre-approval amount for here based on your income, assets, debt, everything like that. But that doesn't necessarily mean that you want to spend per month if they approve you for $400,000, you may not be comfortable with what that $400,000 mortgage monthly payment looks like. So that's where we have conversations between you, your lender, and us, and we figure out what you're comfortable with for that monthly payment, and then we can use that to guide us in what that actual top purchase price might be. So you may be pre-approved for $400,000, but really where you want your monthly payment to be is more at a $375,000 purchase price. So that's something we talk about and work with on you, so that you're not feeling like you're in over your head. And keep in mind too, that money is paying yourself. You're not paying an apartment complex, you're not paying somebody else's mortgage, you're paying yourself. And then we try to find you a home. So this is where we define your criteria. We analyze what you want, what your needs are, and then we consult with each other to understand what that gets us in this market, in certain neighborhoods, certain parts of town, everything like that. So when we're out shopping for a home and we're looking at houses, we need to think that you as the buyer are looking at a home in one way. You're looking at how many bedrooms there are. Do you like the color of the paint on the walls, the color of the carpet? Does the kitchen have the right setup for you? That type of thing. We're going to be looking at it from a different perspective. We're going to be comparing that home to other homes in the neighborhood that have sold for a similar or different price in terms of size, layout. Are there any maintenance or structural concerns we need to be worried about that would add extra cost to you down the road? So when we're looking, we're coming at it from two different angles, which is actually a benefit to you, because again, your eyes are seeing it one way, our eyes are seeing it another, and we can make sure that we hit everything that we need to hit. So when we're out shopping and we finally come across a house that you like, it's time for us to make an offer. So the price is, there's basically three components to an offer. One is price. So that basically means, what are we paying for the house? So what are we offering on the house? And in this market, we have to kind of think about that a little differently. We have to think of price and value. So just because a house is $350,000 on paper, as an appraiser would come out with, that house might actually have a value of $360,000 to you because of the money that you're going to save by not paying rent, by it being the perfect house that you've been searching high and low for. And also the biggest thing to think about is the appreciation. So in this market, we're seeing offers come in above list price, but again, you have to look at it that it's price versus value. So the value of that home may be much higher to you to get out of living in mom's basement or out of the nasty landlord house that you're living in. And so we got to weigh all that. And that's conversations that we can have as we're talking about each specific home. The second component is your terms. So basically there's 6 basic categories to address with timing and financial considerations, but basically that's what you're offering, how you're paying for it, closing date, possession date, and a couple other things in there, but that's what the terms of an offer is. And then your contingencies. So that's referred to as conditions that allow us to opt out of a home if we think there's a problem. So we can't know everything about a home when we walk in there for a showing for 15 minutes when we decide to make an offer on it. So this is these contingencies are our opportunities to dig deeper, but still protect your earnest money that you have to deliver when we write that offer, so that if there is something that we find that's detrimental to the property, or you can't quite get the loan you thought you could, we have that protection then to protect your earnest money. And those contingencies are written in the contract, and they're contractual obligations and dates we have to meet. So again, I talked a little bit about what's fair price or fair market value. And again, when we're looking at it as buyers, we don't set that fair market value. Sellers don't set that fair market value. The market is what sets that fair market value. So again, we have to think about how it's going to appraise, but we also have to think about what the value of that home is to you and where it's going to get you in your end game. But ultimately the market sets that value. And that's where we're seeing, a house is listed at $350, but they're getting offers at $375. So that's the fair market value of that home now. It's $375, even though they have it listed at $350. And we'll help you analyze the neighborhood, the town, all of that to make sure that where we're coming in at is fair market value, and we'll advise you as such. So once we get our offer accepted and we're locked in under contract, this is where we get to perform our due diligence. And this is basically just doing our homework. It's some of those contingencies that I talked about earlier, where we have an inspection. We have a certified inspector come in and go through the house, top to bottom, in the attic, in the basement, everywhere, and really making sure that he finds anything and everything that could possibly be wrong with the home. So that we know what you're getting into, what deferred maintenance you might have, are there any current problems that need to be handled right now. The other thing you're going to do is you're going to get your homeowner's policy quote. So that's just getting a quote to show that the house is insurable at a level that you are comfortable with. And then we are going to, can you guys see that? I can't get rid of that. Hold on. We are going to review our paperwork on the seller's side, so that they give us information about what they know about the house. Okay, hold on. Sorry, technical difficulties. There we go. And again, this due diligence on the inspection, we got to keep in mind it's the big stuff that matters. So it's cracks or crumblings in the foundation, leaks, water, mold, that type of thing. It's the big dollar, big ticket things that are hidden, that we can't see with the bare eye when we walk through initially, that we're really looking for. It's not the opportunity to come through and nickel and dime and say, oh, well, this screw is loose or this is that. Those are little things that are just unfortunately part of owning a home in the future. So we're really looking for those big ticket items. And that's to protect you, that's to protect you. So a loose screw isn't going to be something that's detrimental to you in the future necessarily. It's more that furnace or the air conditioning that's leaking everywhere, and that's going to be problematic for you down the road. So once we do that, we get through everything, we're getting ready to close. We have an appraisal done by the lender. We have a survey if necessary. Title does a bunch of stuff on their back end, looking at everything to make sure it can transfer a clear title. that's all kind of stuff that we do that's behind the scenes. What's going to be most important for you as a buyer is to make sure you keep yourself mortgage worthy. So just because you're under contract on a home does not mean it's time to go buy a new car or buy new furniture for this home. You're going to make sure your finances stay kind of exactly the same as they were when you applied for that mortgage until the day of closing, because otherwise your debt ratios could come askew, and then the bank could actually say, I'm sorry, I can't lend to you now, because they'll continue to monitor that all through the process. A few days before closing, we're going to do a final walkthrough of the home to make sure that any inspection items were handled that we asked to have the seller take care of. Make sure everything still looks the same. You're going to get your settlement statement, which kind of explains how much you need to bring, all the fees, etc. You're going to want to get certified funds for that down payment and have those ready to take to the title company on closing. You'll obviously have your evidence of insurance, which we talked about earlier, getting that homeowner's quote, and all of this to make sure that they can transfer a clear title to us as buyers. At this point, congratulations, you now own a home. So yeah, it's a big celebration day. So now once you close, you can go buy furniture for the home and get it all ready to go there. But as we move forward in that time frame, even after you have the keys in hand and the furniture in the house, you're going to want to do some things to keep that investment protected. It's the biggest investment you'll probably ever make, so let's protect it. You're going to want to keep it well maintained. So perform those routine maintenance things on your house. Make sure you have the furnace clean. Check those leaky faucets so they don't continue to leak. And keep an eye open for anything you see might be going wrong and address it immediately. The sooner you address a problem like that, it's going to save you thousands of dollars down the road. And then also keep a file of all your receipts and repairs, because when it's time for you to sell that or move on from that first home to one step closer to your dream home, you're going to want to be able to give all that information to the new buyer. So that is pretty much it for us. So if you would like to have a copy of our free first-time home buyers guide, we'll be more than happy to send that to you. Just email us or call us at this number and information on the screen. Or leave it in the chat, and we will definitely get that to you. And know that we are always here for any questions you might have. We believe in educating and really taking care of our clients. So we don't push. We are here when you are ready. Cheryl, anything else?
No, I think you covered it all. We just are super excited to be able to help you buy your first home, and first-time home buyers are one of our favorite clients. So we look forward to working with you.
Okay, take care, everybody.
Thank you.
Bye.